Yes, sit by my side. Yes.
Nice to see you.
Okay. All right, let's get everybody situated. Good afternoon, everybody. I am so excited to be here today and to be talking to the gentleman and the lady here with me today about something that I love to talk about: money, exits, liquidity. And also, first of all, shout out to Ventures platform for their latest $64 million Pan-African Fund. Looking forward to what they do with it. Yeah, so very excited to have two of the men that I feel really lead Nigeria's money market, right? Mr. Bolaji Balogun and, of course, Mr. Temi Popoola. Lions then described you as the leading man in investment banking, right? You know, Hill Denham has done incredible work over the years in this sector. And I'm like really curious to hear from you about how you see this industry right now. Mr. Ogwuche had an interview recently where he talked about the fact that, you know, Nigeria's investment accounts is almost non-existent, right? You have people using money for different things, they are putting it in savings, but once it comes to investments, there's a huge gap there between what the fintechs are doing and also what they are also doing to try to encourage people to invest more. So from your perspective, like, how do you see the current market?
So I think first and foremost, good afternoon, Ventures platform. Thank you very much for inviting me to speak. The markets are alive and well in Nigeria. That's the first message I'll share. Second message I'll share is that these markets are alive and well for well-governed entities, whether they're private sector entities or they're public sector entities. This afternoon, as an example, Lagos State will price a 200 billion naira bond, probably somewhere under 17%, in what still looks like, you know, fairly expensive market conditions. And the reason Lagos State can do that is that over the last 20 years, it's built a track record in these markets for keeping its promises, for using capital responsibly to grow, and primarily for growth, not for consumption or for lifestyle and so on. And everyone who lives in Lagos, the reason we can move around better, the reason the city is beginning to make sense is all of the investments that have been made. And I would use a corporate example. If MTN today, another user of the capital markets, launched a deal to raise 200 billion naira, we would raise that in 3 days in these markets. This is how deep and liquid these markets are. And what's the big driver of that? The first segment is an incredible wall of capital that's been built around Nigeria's pension industry. $27 billion of capital which can't travel anywhere. So it needs to invest here. It's investing primarily in government securities. It would like to do much more in equities. We've just completed a capital raise for one of Nigeria's banks. And for the first time, I've seen something quite transformational. More than a third of that large deal has essentially been put away by Nigeria's pension industry. This would not have happened 2 years ago. So I think the opportunity set is that if people behave well, they know how to use other people's money, and this exists with both very small as well as very large companies. They have that discipline, that governance around them, which is necessary to scale. Founders continue to be very, very talented, but talent abounds in places like this. And for people who don't travel a lot, that's one of the big things they miss. But one thing that is deficient often is character and competence. And when you put all those three things together, talent, character, and competence, you can build a business that will scale to be billions. I think one of the key things the VC industry is now realizing is that unicorns exist everywhere.
Yes.
And the majority of unicorns that will come in the world over the next 30 years are going to come from places like this, from this continent. Mm-hmm. And that's why I sometimes wish that I was 30 rather than where I am today. And I was doing some of the things I did in my 30s all over again.
Okay, so I'm definitely going to come back to you on two things that you said. First of all, behave well, and also the access to just the vast amounts of capital that you mentioned. I mean, there are startup founders here in this room that I don't think they have that kind of access, so I'll come back to you. You mentioned unicorns, Mr. Popoola. You were in New York 2 years ago during Onga Week. Mr. Balogun, you were there as well. You had a conversation with GB Agbola, who is the founder CEO of Flutterwave, and also Honorable Minister Bosun Tijani. And, and I feel like for the last how many years, you have been on a personal crusade to get more startups to list on the exchange, right? And I know at that meeting, that was the conversation that was being had, and you asked GB at the time, like, when are you going to list? Whenever you're ready, I'm ready. Speaking of another unicorn, InterSwitch, they also had intentions to list before Visa invested in them, and then, of course, they became a unicorn. I had an interview with Mitchell Legbe, who is the CEO of InterSwitch recently, and I asked him the same question. Do you still plan on listing? And he said, it's not out of the question, but when it's time. So, where are you with that? Are you making any progress trying to get these startups to list on your exchange?
Thank you very much. Let me also add to Mr. Balogun's warm good afternoon to everybody. It's such a pleasure to be here, and let me congratulate Kola and the entire team for what I think is a very, very wonderful event. Thank you for having me here. So your question almost reminds me of a strategy session I was having this morning, and I was wondering if you were a fly on the wall.
Maybe.
Where, I was practically asking specifically about some of these companies from the advisors. But I would say a few things. I think one of the things that we found out is that there are a few different variables. First variable is really to ask, at what stage of a company's evolution is it ready for our markets? And as people talk a lot about how tech is thriving, how you're creating all these unicorns, I'm sure people in this room are familiar enough with the fact that, that evolution of capital raising is everything from family and friends all the way to VC to PE to the markets that we operate and that we execute around. So that's one very important thing that we've thought through and thought around, which is to say, look, if there's all this activity happening, call it further downstream, away from us, away from this mature markets, what can we do as an industry to still find ways to attract them? And some of the things that we thought about doing there were things like maybe setting up a technology-specific board where we relax a lot of the rules that will be applicable to the mature market. So whether that's everything from your governance levels to the perhaps even the structure of the companies, everything from dual-class ownership types of structures, all the way, I think, that getting close to your question around some of the bigger companies, this issue around when you look in the lens from the lens of the companies. If I'm a huge unicorn today and my current core shareholder base is, funds out of the US, funds out of anywhere in the world in dollars, how can it be that my value proposition to you as an exchange is a Naira listing locally? Oh. And we feel that that needs to change, that needs to be cured, which simply says, can we have a market that does allow perhaps a dollar-related type of listing, a dollar-related, part of our market? Mr. Balogun led some very big efforts sometime last year where the federal government of Nigeria came locally onshore and was able to raise dollars in country on the fixed income side of things. And we're looking through how do you build and scale on that. So to answer your question, one of the big deterrents really is that I probably can't look at Mr. Agbola in the eye and tell him that after all this work you have done, the exit is a Naira listing only in and of itself. Now, a Naira listing is important because also, like was said earlier, a lot of your pension funds locally, that's a huge, huge pool of capital. Yeah. That's Naira-based capital. But in reality, there are two sides. So that's one piece of the equation. The other piece is if you think through maybe perhaps traditional companies and how you'd run a company, you think about things like your product, you think about things like your route to market, you think about the way you sell your product, you think about investor education. Somewhere in all of that also is a big piece that we need to cure, which is if I ask everyone in this room right now to maybe buy a stock or buy shares in a company, they would struggle just because our route to market and our channels for distributing is not quite there yet. It takes you back to technology. We need to really cure for a world where every Nigerian can pull up a phone, the way you can download the app of one of these fintechs today and get into the financial markets very easily. Why can't you do that in the capital markets? When you fix some of those, when you bring the large transactions, I think you'd see a very good pool of capital sort of back and forth. So I think in summary, the point I'll leave you with is that those transactions you mentioned are still very firmly on the table. Okay. Of those two names you mentioned, I expect hopefully next year we'll see at least one of those in the market. And as it comes, some of these levers that I've spoken to also would have been addressed.
Okay, because I think that's going to be such an exciting moment for the tech ecosystem. I mean, we see that happen in South Africa, right, where, you know, startups are getting listed on the exchange, exactly. And it's like, yes, we want that for Nigeria as well. Michelle, Elias, your work is legal infrastructure. And I know whenever we have conversations about the tech industry, there's a lot of talk about governance. You know, governance is very important because it's either the reason why you're invested in or not, is the reason why you might end up on the exchange or not. So for you, what are the kinds of things that you're seeing these days that are becoming blockers for people who, or startups or companies who want to take their ambitions a step further, but it's just not happening yet because of how they're constituted?
Well, first of all, thank you very much for having me. Good afternoon, everyone. Governance is critical, transparency. We do have the legal framework, regulatory framework. There's the Companies and Allied Matters Act 2020 that sets out what the governance standard is, you know, the minimum, the transparency requirement, investor or shareholder information rights, and, you know, a lot of putting together your registers, your information, keeping records of meetings, all of that, you know, separation of powers between the board oversight and management. We have all of that. But where I think it's, we have a problem is compliance and enforcement, right? Because for compliance, you know, so there's some cultural thing around, maybe in a general sense, Nigerians may not want to keep to rules, you know, looking for how to escape the rules, you know, and that's because our enforcement, that's judicial enforcement, regulatory enforcement, is not as strong as it should be or as it is in other countries. So people try to find a way to boycott, you know, following the laws. But what I have seen is ensuring that if you're running a business, you know, comply with governance requirements, whether it's in your shareholders agreement, your articles of association, or the law itself. Keep records, hold the meetings, you know, declare when you have a related party transactions, make sure it's on arm's length terms. All of those things are critical. And by the time an investor or a potential investor is coming in, that's what they want to look at. They're asking you for your document, they're asking you for your financials and all of that. So that's what I would say is very important, yeah.
When you said the Company and Allied Matters Act, CAMA.
Yes.
In my former life, I studied law, and it just took me back to trying to cram that act. I'm sure if there are any law students here, you probably don't want to have that memory anymore. Mr. Shirantan, I think, I mean, venture capital BII, been one of the earliest backers of African venture capital. And I know these days when I talk to my founder friends, you know, they don't, some of them have great relationships with their investors, some of them don't, you know, and sometimes for good reason, sometimes not. But I think these days, a lot of investors are very, very adamant about liquidity. We want to see you return money to us so we can return it back to our LPs or whatever. But like these days, people are thinking about, like, what does that look like? Secondary sales, you know, M&As, you know, okay, maybe you might become a unicorn. There are still only 9 unicorns on the entire continent, so that's not something that's happening really quickly. But for you, just from your perspective, like, how do you see this industry, and what do you think are some of the ways that, you know, startups can start thinking about liquidity?
No, thank you. Thank you for having us and have BI and have it, you know, I think when we started the day, we spoke a lot about innovation, prosperity, and this is a very different kind of mix that we're getting into. And this, and I'll explain as we talk about policy and what people should do. If you think about most of the industries that grew in Nigeria, across Africa, across Asia, as developing markets, right? Usually, the first form of funding was friends and family, their own capital, and or banks. And it was a very different sort of push and pull that they had to build these all traditional businesses. But what we're starting to see now is a lot more businesses being built by much younger kind of generation, thinking about, I agree, it's better to be younger now. Earlier, everyone wanted to be investment bankers. Now they want to be founders.
Yes.
It's a big cultural shift. And the capital which comes with that and the governance which comes with that is also very different because you have venture capital suddenly backing an idea. This never happened before. We didn't have risk capital before. But we're also starting to see them bring in governance. So there's a lot of stuff which is happening. But with that, I think there is some kind of misguided thing around, I want return right now. This is not a hedge fund asset class. This is not a public market asset class. It's a very long-term asset class. It's going to take time. It's going to have failures. So I think the ask from folks that, I need liquidity now, get it somehow, is a bit short-sighted. I mentioned most of the best companies, even globally, take a very long time to exit. And so what we should be focusing on and what BII has been doing in the ecosystem is to think about interim liquidity events. Let's at least prove the model that these companies are worth something. And so one of the ways we've done this through is secondaries. So we've done really interesting work around secondary transactions where we sell onwards to other people that want to come in. And that's important because that sets one sort of a marker within the journey of an early stage company. I think pushing them to, I think they should walk before they should run. So pushing them to something which should take time is probably not the right thing. So, small trade sales, fund level secondaries, company level secondaries, we're very, very active in doing that. So we've done quite a few transactions in the continent on that.
When you mentioned secondaries, I remember an interview that I had with Kola Aina when I asked him what his favorite investor quote was. And he said, a bird in hand is the only bird, where he was talking about exits. That sometimes, okay, there's an opportunity here to take money out, but then you're stuck with that dilemma where you're wondering, okay, I could take this money out now and it'll be fine, but if they go on to do even better, I might be losing more in the future. Case in point, NVIDIA and SoftBank just recently. So yeah, that was really interesting to put together. Mr. Balogun, I'm back to you because you said something that, tickled my ears a bit, about behaving well. If you behave well, you might have access to capital. And so recently, there was this Nest Oil controversy, right? Their assets have been seized, they've been owing banks. And it started this conversation online about the fact that sometimes these are the kinds of people that get access to capital. And you have SMEs looking for capital, you have startups looking for capital, they don't have access to it. You just mentioned now that you raised $300 million in how long? But I don't think that is something that a startup can say. So what do you think, what does behave well mean? And why don't startups and all these other kinds of companies have that same access to that kind of capital?
Okay. So I think first and foremost, the way that we've tried to finance SMEs and startups in this market to a large extent, fundamentally doesn't make sense. Yeah? Banks all over the world really don't lend to SMEs. And there's a very fundamental principle why. They're trying to keep very, very high credit ratings. If you look at the biggest banks in this country, and sorry to use some jargon, but if you look at their Pillar 3 reporting, which tells you where effectively they're lending to, less than 6 to 7% of what they're lending is going to SMEs or MSMEs. And you look at the development banks like the BOI. BOI's rules say that they must take collateral to lend you money. two things often mean that SMEs and startups struggle to find money. Experience, which people will typically ask you, what have you done before, right? Or collateral. And therefore, we need to start thinking about innovative fund-type structures. But fund-type structures also doesn't mean private equity. And you've just spoken about the duration issue, yeah? The PE life cycle of raise some capital, invest for 3 to 5 years, start to look for exits, frankly, has failed in Africa. And when you look at all the results are very apparent for us to see. And it will be even harder in venture. So what you've got to do is to create long-duration funds. And long-duration funds, there's a world-class model that works, will be found in the UK market. 103 of the 350 companies in the FTSE 350 are listed investment trusts. And what listed investment trusts allow you to do is basically to bring liquidity to an illiquid asset class. And this is why they're used for things like infrastructure, they're used, for areas like real estate. They also will work for the venture industry where you need long duration.
Okay.
The startup industry in this continent is very much at a putative stage. And what do I mean by that? Many founders, this is the first time that they've ever had to deal with other people's money. And the first time you have to deal with other people's money, it doesn't mean that you're wired badly, right? If a lot of money has never been thrown at you, you may lose your way if you don't have a lot of wise heads around the table. There are many founders, and we've learned a few lessons. And, in another part of our business, we've been a significant venture investor, writing money when a lot of the flow of capital from the West Coast of the US slowed down over the last 3-4 years. And I'll tell you some of our learnings from 80, 90 investments in that portfolio. The founders who have had significant experience, who've worked somewhere, who've learned their craft, have tended to be the most successful at being able to scale. They're the founders who, it's not just about I can write beautiful code, and therefore my company is worth $25 million. It takes a little bit more than that. The same basic principles that allow a traditional style company to scale properly. I understand my product. I understand my route to market. I understand my margins. I understand how to build a brand. I understand distribution and selling. All of these principles are really, really fundamental, whether you're building B2C or you're building, even in some instances, B2B. And if you turn up today to us, no matter how beautiful the code is, right? And you've never worked somewhere and gotten some real life experience. If we wrote a check, we don't expect it to come back. Yeah?
Okay.
And every single time we find a founder who has some basis of experience, and this is why I have a lot of time for founders like Tosin and Yolorunda, like GB, They learned their craft somewhere. They understood P&L. They understood margins. They understood structure. They understood discipline. And these are the things that are really, really fundamental, along with that innate talent. But I'll tell you what else they have, which is also missing in plenty of other founders. Very, very few founders have the humility that ensures that you will succeed. And I speak from a place of authority. With respect, I'm one of the co-founders of the first proper unicorn that was built in this market, which is a business that you all know today as Airtel Nigeria, which started off as Econet Wireless Nigeria. We built that business from a concept, a business plan that I wrote, to raising capital, to getting into an auction room, to winning a license in January of 2001. In order to raise that capital, I literally had to give up all the equity. To get $285 million as a 33-year-old, you're not going to be left with a lot. Yeah? By the time we won that license, I was left with less than 5% equity. But we built that business, and we built it to 5.5 million subscribers. We sold it in December of 2005. For 8.5 times our money, we sold it for $1.7 billion, but we collected our money. That's what a real exit is called. It's not paper profit. Yeah? We sold it too early because I think we all didn't call what was going to happen in mobile correctly. And when we wrote those business plans, we all thought at the peak there'd be 35 million mobile subscribers in the market. And none of us ever saw 200 million subscribers. Every single one of the 3 business plans, the MTN business plan, the Econet Wireless business plan, the CIL business plan. CIL is the business that ultimately became Glo, has a commonality. Everybody expected the market at peak will be 32 to 35 million subscribers, and the largest operator will be 13 to 15 million. So we thought we'd reached the peak in 2005, and we were struggling among the shareholders, and we had a problem with our operator, Strive Masiwa. So we decided the easiest thing was to sell the business. Unfortunately, we sold it quite early. Someone called Mo Ibrahim came along, bought that business from us, added a few small villages across Africa to it, and sold the business for $3.5 billion 14 months later. So we realized we'd left a lot of money on the table. But the long and short of that story, is that success, unicorns, big businesses can be built here by young people. And the market opportunity affords itself. But the commonality around the 5 or 6 young people who built that business, including Strive, was a fair base of experience, an understanding of how to deal with other people's money. Because our money in there was non-existent or tiny. I was probably the only co-founder who borrowed, levered myself up to the hilt, sold everything I had, including 1 or 2 cars I had at home, to borrow the money that I put in as equity. All the other co-founders were carried, and we therefore had different outcomes when we exited it. But we placed the capital with institutions, right? And that mobile history is the foundation of everything that we do today with fintech and so on. So when I look back over time, and I look back at what I think was fundamental, right? If governance had been very, very strong around those businesses, and the governance issue was you simply had shareholders who were fighting among themselves, we would have built that business to $10 billion, and we'd still own a large part of it today. Once there was a dispute among founders, and that dispute ended up with Strive suing us in about 16 courts and pieces of arbitration all over the world, and losing every single one of them. He won one, which on appeal, he ultimately lost. But the fundamentals of why I tell that story is that innovation, entrepreneurship, are the things that are going to drag this country kicking and screaming out of poverty. And it's going to be done and built here by young people in this room and many other young people across these markets. There is significant domestic capital. In 2001, we didn't raise a dime from abroad. Every single piece of the $200 million that we raised came from 9 institutional investors in this country. So if we could do that far back, absolutely everything is possible here.
Okay.
And the markets will also allow exits. Temi will tell you that we built the rails that now allow all sorts of things to happen in the markets. So 3 years ago, MTN Group wanted to sell down some of their shareholding. We did, over a short period of time, first digital offering here. We built that app in our firm, right? And the stock exchange passported it so that we could get through the regulator to use it for MTN. And the results were outstanding. He will tell you that one transaction tripled the number of active participants in the market. 92% of the people who bought MTN never bought a stock in their life. So they opened fresh accounts for the first time. 71 or 72% of them were women. So you wonder what the men do with their money. They're probably buying nice cars and spending it on other interesting things. Thank God for the women who are investing in our future.
I'm very happy that this is going to be recorded because I feel like we need to put this on YouTube, NCA everywhere.
But
yes.
those rails have been extremely well built.
Okay.
Temi talked about how do we provide access to markets for people. Yeah? I have a daytime job, but I also have a nighttime job. So my nighttime job is I built an app called Invest Niger.
Yes.
And what I've done is I basically put 35 years of experience in these markets into addressing the two things that I think hold people back from investing. Financial education and access. And we built this mobile app. It was a labor of love. I don't know how to write code. So describing what I wanted to do to people who know how to write code, beginning to write wireframes and so on, was a labor of love for me and took 11 years of my life. But without making any noise, without spending a lot of money on marketing, I have 143,000 active users today. And absolutely everything is possible on the back of these rails that have been built. And for me, that's why I say that I wish I was 33 all over again and not where I'm at. If you're a young entrepreneur in this part of the world, you should be bloody excited about the next few decades.
Well, that's very exciting. Well, also, how I found out about Invest Niger, apart from, through Chapel Hill, you guys sponsored the last Big Brother.
It was useful.
Yes.
It helped us add a few subscribers.
Okay.
But it's not all about that.
Okay. So everybody, please go download Invest Niger. Give Mr. Balogun a couple more thousand
Very kind of you.
subscribers. Yeah, so I don't know if you know this, but you're a fan favorite on Twitter, primarily because I think there's been like a resurgence of interest in investments, especially the Nigerian stock exchange, right? Young Nigerians these days, they want to take a little bit more risk, so they're not necessarily just saving money anymore. They actually want to like throw it in the stock market. So now they actually have something that's called stock market influencers. Not all of them are giving good advice. And hopefully we're able to filter those out, right? But there's this resurgence now in just interest in the stock market and people wanting to invest in that. And I know you spoke about making it easy for people to be able to pick up their phones and just like invest directly. But For you, like, how are you seeing that? Is the NGX paying attention to any of the activity at all? And are you actively trying to engage that audience?
Thank you very much. Simple answer is yes.
Okay.
In fact, yesterday I was, I think, at a panel, and one of our intermediaries had spoken about how somebody had recommended a particular ETF, one of these influencers, and they saw tremendous traffic. I said, look, help me find whoever this influencer is, and I sent that to my team to follow up. But I think, simply put, we really are at a time that maybe we haven't seen in maybe 20 odd years as a capital market community. And we're really trying to do everything possible to capitalize on these moments. Yeah. From several areas. Mr. Balogun spoke about some of the digital infrastructure that we've put in place and some of those rails. Those have largely addressed primary market problems, where if a corporate came, every single bank that raised money last year, if you're aware, the Central Bank of Nigeria had asked the banks to raise the capital levels, were able to have every bank on their mobile app have the ability to, in 3, 4, 5, touches, allow you invest. So, I don't know, a bank is raising money on the app, trying to transfer money to a friend. Well, you see all of a sudden, buy my shares. The bank has your KYC, the bank has your money anyways, and so you can see how easy that was. So, on the primary market side, a lot of that, progress has been made. And one way you would take that further is that what the banks used for their own transaction. You can imagine a scenario now where a large corporate comes, or even an SME comes to raise capital one day in our market, and every single banking app has that transaction on it, of course, for you to be able to access. This is kind of where we're going. But away from that, your question on the secondary market side now, where we say any of the securities that are trading today it's still not very easy. Thank you for, people like Chapel who built this product, but you really need a way to scale that up. And it's a big part of the problems we're trying to solve. 2 or 3 more things I would say back to this subject of SMEs. As the exchange, there are 2 things that are driving what we are doing now. One is to say, look, as also an ecosystem, how do we support the country? And this question of SMEs is not lost on us. There are 2 things we're trying to work with the regulator around. Number 1 is the realization that all these SMEs typically have invoices, typically need some sort of working capital. And we're working with the regulator now as the exchange to come up with receivable financing, invoice discounting, factoring. We think this would really tremendously help that whole SME community, where you can come with some of these assets, get capital market money to that, and get that going. Number 2 is around private markets. Also, we're doing quite some work with the regulator, because the reality is that it's not everything that will come to public markets. We spoke earlier how sometimes the maturation level is just not public markets ready. Yes. And so how do we make sure we're not a one-trick pony? All you have is shares, and if you're lucky, maybe some fixed income. I think that private market ecosystem also remains something that we're looking to. And then finally is back to our products. The reality is that most Nigerians consume other types of products. Yeah. From shares and from fixed income. It doesn't matter how we innovate, you probably would never find those Nigerians. And so the question is, what can we do to attract some of those? 2 things. Number 1, the shares that we sell, can you color those differently and make them more like digital assets? And number 2, some of these crypto and digital assets that people invest into, how can we as an exchange and a market come closer to those sorts of products?
I wish I could continue this conversation, but I'm getting signals from left and right to wrap up. But I wanted to thank all of you for this fascinating conversation. I could talk to you all day, but unfortunately, so please give another round of applause for Michelle, Mr. Balogun, Mr. Popoola, Sharon Sad, and thank you so much for listening to us.
Thank you. Thank you.
Thank you. Thank you, ma'am.
Of course.
Thank you.
Thank you, sir.
Thank you very much.
Yeah.
Very well.